I'm going to give you one other little fact about me. I'm a print journalist, and I started off in print journalism writing about beer. And one of the great insults broadcast journalists hand out to each other is, you've got a great face for radio. In my case, I would suggest I've got a great body for print. Now today, what we're going to be talking about are OTAs, it's about the sharing economy, OTAs, Web 1.0, sharing economy, Web 2.0, and we're going to be talking about the book direct response. And to help me discuss this, I'd like to bring up to the stage my panel, and I'm going to start with our OTA. Andrea, please, can you come up? So it's Andrea D'Amico. He's the regional director for Priceline, well, Booking.com, but owned by the Priceline Group. Please take a seat. And now our sharing economy player, Olivier Grémillon, managing director EMEA for AirBnB. And our book direct expert, Francis Louis Passerini, managing director Southern Europe, Middle East and Africa for FASTBOOKING. Francis, take a seat. Great, can you take that one? Just there, that'd be great, thank you. So let's just put a little bit of context on the situation we have. There's been a lot of hype about OTAs, a lot of hype in terms of the intermediaries. Now I hear all sorts of things thrown at them. I hear that they're just websites, but let me tell you, they are not just websites. The amount of money they are spending on advertising and marketing is immense. So Priceline we have here, and Expedia, the world's two biggest OTAs, they spend $5 billion US a year on marketing and advertising. That dwarfs anything. If you add all of the spending of hotel companies, it doesn't come anywhere near that, doesn't touch it. They are giant marketing machines. They are much more than just websites. Priceline, Andrea's company, has a market capitalization more than twice the biggest hotel group in the world. So more than twice Hilton or Marriott Starwood. They're huge. Sharing economy, the implied valuation of Airbnb, I mean, you can take an issue with some of the way some of these companies are valued, but certainly the implied valuation right now puts Airbnb as big as Hilton or Marriott and Starwood. These are serious players backed by serious money. Gentlemen, welcome. I think I'd like to start with this whole book direct issue. So we have Hilton with the Stop Clicking Around campaign. We have Marriott with the It Pays to Book Direct, IHG, Accor, Hyatt. They're all pushing now for book direct. Is this a serious threat to your business, Andrea?
Well, we don't always like or agree what brands do, but overall we have with them a very good relationship and also very good and constructive discussions on a daily basis on how to improve also the business that we do together in the interest of the hotels. I think there is a lot of talk also in the media about the fight between brands and OTAs, but I think the reality is that there is a lot of interdependency here. We like working with brands because of course they have a great product that we want to offer to our customers. They like to work with us because they know that we can send them business that otherwise they will not be able to catch. Just to give you an idea, basically almost all business that we send to our partners, including the brands, is all transient customers. Only 2% of our customers book the same hotel twice on Booking.com. And also, if you look at maybe those who are more familiar with our website knows also about how to filter the results. There is also the possibility to filter by chain. So I say I want to see only chains, and this is the least used filter. Less than 2% select that filter. And here I'm talking about chains in general. If you then break down by each individual chain, even the biggest chain gets maybe 0.1 filter. This means that when our customers come to Booking.com, because maybe they are looking for an accommodation in Dubai. They're not looking for a Marriott. They're not looking for a Accor. They're looking for a great accommodation. Then they might end up making a reservation in one of these chains, and then is the possibility for these chains or also for individual hotels to make these customers individual to them. So basically, reality is that customers who want to book a brand go to brand website. Customers who want to book any accommodation, they don't go to brand. They will come to us. Overall, going back to your original questions about the brand campaigns, I think that the brands, of course, are the best people also to answer this question. But if I look overall, the cost of the campaigns, the cost to maintain loyalty programs, the lower ADR because of the discounts that you have to give, the impact of the lower also billboard effect that is coming from having potentially less visibility on OTAs, which means also less business from OTAs, but also less direct business. I really doubt that this at the end is contributing a lot on bottom line, especially if you think that sometimes these rates also go through meta search, and then you also have additional costs. And I really don't think that at the end the ROI is healthy about that. But as I said, this is not this is not my, perhaps I'm not the best person to answer that. I think just to close, the reality is that the bookings that the business that brands are getting through us is increasing. The business that they're getting directly is increasing. 2015 has been a record year for also hotel development. So when I hear about fights between brands, OTAs, or OTAs eating the hotel's margins, I think it doesn't always match what the reality is telling.
Just in terms of the battle lines between, if you allow me to characterize it like that, between the OTAs and the big brands. In terms of the amount of business you put through the big brands, it's like 10 to 15%, I think. The rest of it goes to smaller chains and independents.
Yeah, more or less, yeah.
Yeah. So actually, and in terms of the OTA proportion through the big brands, it's 10% plus, isn't it?
Yeah, roughly.
Yeah. Francis, isn't this campaign by the big brands doomed? If you look at the marketing budget Andrea has, that spend, I mean, it's just enormous relative. I mean, 10, 15 years ago, I could see that there was much more evenly balanced, but now what is spent by the likes of Priceline, spent by the likes of Expedia, it dwarfs anything the brands have put out.
No doubt, the potential and the investment that they can put on marketing campaigns is huge. That's for sure. It is also true that direct brands can do today marketing campaigns. They cannot probably invest as much as, that's for sure, but they can work on their niche product, they can work on specific products, and they can capitalize on marketing campaigns. The technology is there. Now, what the major focus is that probably in hotels, which is probably the independent world, not much as big chains, there's also a need for skills. There's also a need for people who know how to drive campaigns, which is probably one of the biggest issues today. And there's also the will of an investor, of an owner, of a manager, to do things inside a hotel. Because sometimes what happens is that things are just easy because you just give inventory and rates to OTAs, and that will make the whole machine run. But you need also to put a lot of goodwill and to have a lot of people who will do this thing. Let's just remember that OTA business is very important, but OTA realize today that direct brand visibility, traffic, and conversion is possible. And that's probably one of the reasons why strategies of OTAs are going towards rate managers inside hotels. They're trying to get also visibility of all the rate strategy of the hotel. PMS world, they're going to drive and to get data from hotels as well. They are also going to the direct website world as well. So OTAs are realizing that the trend is there, and they have to also work on direct website campaigns as well. So they are moving their trend elsewhere as well.
In terms of the OTAs are pushing
Of course,
in that
of course,
direction.
yeah.
But surely one of the other issues you have, if you're an owner of a property which has a franchise with one of the big brands, if all of a sudden you stop working or at least downgrade your relationship with Booking.com, you're going to end up on page 5, page 6 of that listing, and you're going to see all that 10%, 15%, maybe more traffic that had been being sold through Booking.com go to the hotel, down the road.
Competitor.
Isn't that a big issue?
Oh yeah, it is a big issue, but it stands on the investor know-how and investor will to do all the marketing campaigns necessary today to not fight a war black and white. It's not or either black or white. It is a balance between all the strength and all the efforts you have in online business today. So there's no way, I remember 20, 30 years ago, I'm a bit old for that, but 20, 30 years ago, there were still operators working in tour operator business, FIT, traditional walk-in business. So it's a really good mix of what you have today, which will make the right trick. What the hotel investors need to understand is that OTA business today is really important. There's no doubt about that. But you still can do direct visibility today much more than 10 years ago. I've been asked several times, Francis, what can we do about it? Well, you can do exactly the same things with our technology of providers today, what Booking.com or Expedia were doing 10 years ago. But they're still asking. So they're not really aware of all the potential they have today inside hotel business.
Now, is it possible to catch up? Can they catch up?
They can catch up at one extent that they can capitalize on their loyalty programs. That's one thing that we probably haven't talked a lot previously, but loyalty programs, you need to capitalize on that. So if you capitalize a lot on loyalty programs, you can catch up on that. And there's another portion that you can catch up when you have a product website, which is a boutique hotel, which is an eco-green hotel. On that, you can capitalize a lot, but you have to still do your efforts in sales and marketing. If you don't do your sales, it's not going just to happen. I mean, you need to put in some of your efforts in that.
Okay. And just quickly, before we bring in Olivier, Andrea, I'd just like to ask you in terms of the response that Priceline has had towards this. I mean, Darren Houston, one of the things I have to do, part of my job is listen to all the quarterly conference calls. And Darren, in that, he sounded quite grumpy about the whole approach Hilton and Marriott have taken, and he was questioned directly by the Wall Street analysts on that. Is it a case that you're going to have a deliberate fight back against the big brands doing this, or are you just going to just stand aside and let them get on with it?
No, there will be no specific action that we will take. We truly believe, but this is also related to brands, but also for independent hotels, that being competitive on Booking.com or also on other OTAs is also in their own interest. I mean, when they are on OTAs on Booking.com, they are exposed to such a big audience that really missing business just because they want to they don't want to give competitive rates on our website can really backfire and ultimately being also negative for their let's say bottom line. This is because of course you might be missing business that comes from us directly. You might miss also for example customers that find you, that see that you have a great deal, and then maybe they come to your website and they book directly. You might also miss, for example, customers who book through us the first time and then you make loyal. So that's why there is also a lot of discussion about the legal battle about the rate parity, but so far we have never enforced it also by contract. I mean, we don't go to a hotel and say, now you need to adjust the contract, the rates, because it's really in here. Of course, there are discussions with the brands about it, but it's not really our main action. We really try to make them understand why it's also good for
So it's just a case of you being more vocal about the disadvantages there. Okay. This is Web 1.0 we talked about in terms, so this kicked off nearly 20 years ago now, so the first real OTA, Expedia, an offshoot of Microsoft before Priceline got going and made a huge success, particularly in Europe with Booking.com. Much more recent is Web 2.0, peer-to-peer networking, sharing economy, call it what you will. What we saw in the hotel industry with Web 1.0 was a big attack on margins. So that's the thing you hear constantly, is the 20% plus commissions that are being charged by Booking.com. Web 2.0, the threat there is actually at the top line, because what companies like Airbnb are doing are introducing new supply into the market, making that new supply accessible to a much broader audience and potentially hotel guests. Olivier, I mean, how do you see it? Do you think what your offer at Airbnb, is it incremental? Is it that you're going out introducing new people, new guests to travel and tourism? Or is it actually, are you having a big impact in terms of substitution? I'd like to hear your thoughts on how that balance is.
Yeah, obviously I'm going to tell you it's incremental, but you shouldn't believe me just because I say so. The good thing is, by now, a lot of hotel operators, a lot of university professors, a lot of journalists, a lot of consultants have done studies about it, where they actually show all the time that it's mostly incremental and not that much substitution. So, we know of all the big chains who hire like consultants for a lot of money to actually do these studies, and basically the studies show the same thing every time. Just to give you an example, for instance, I'm here with you in Dubai today. My apartment is rented to a family of 4 coming from Switzerland. They are staying in Paris. They would have not come to Paris if Airbnb didn't exist. Not because there's not great hotels in Paris, just because they are with a family and they needed a crib. I happened to have 2 small children as well, so it was convenient. And they have a bigger place and they can cook, in my apartment, which makes life much easier for them to spend a week in Paris. It happens to be potentially a little bit more affordable than some of the hotel options, but not necessarily. So I think this is creating a new type of tourism. People come to specific cities, to specific regions, with Airbnb or the likes that would have not stayed otherwise. Another example is things that happen in cities, whether it's the Expo 2020 here, whether it's the Rio Olympics in a few months. You have a lot of events globally where the occupancy rate is going to be close to 100%. And it's not necessarily a good thing to build a lot of hotels in Rio to make sure that we can accommodate people coming from the Olympics for a month. So what the city is doing is they are building for maybe 75% of the capacity, and the rest is going to be taken care of by the locals who can welcome visitors at their place. That's what happened in Rio for the World Cup. 25% of the people who visited Rio during the World Cup stayed on Airbnb. Does it mean that the hotels didn't do great during that time? No. Is it better for everybody? Yes, I think so, because otherwise you would have occupancy rates in Rio between the World Cup and the Olympics of 50%, so, which is not necessarily what they want.
I absolutely agree that you have a massive incremental effect. There's no question about that. That's seen. But I think there's a big substitutional effect. And we talk to the money. So we've had at an event we put on discussing distribution, we had an investment bank analyst from Jefferies, and he marked down all of the hotel companies as a direct result of the threat from Airbnb. Very concerned about that. We've had investment bank analysts in the UK looking at the impact here. So I'd like to say Barclays, which look at what you have in terms of your inventory. You have the equivalent of already IHG's room stock. Now, so, I mean, this isn't just the total number, because you put out how many rooms you list, but what matters actually in your case is how long those rooms are available for. So you have to actually look at the actual availability of those rooms to get a true sense of your capacity. But already, I think you're already a global major hotel company. There is clear substitutional effect going to happen inevitably, isn't there?
Yeah, just on this, because very often people say we have 2 million apartments and villas and rooms, which is true. And they compare us to the number of rooms that the big hotel chains have. It happens to be that it's not directly comparable. Just to take my example again, we are in late April. That's the first time I'm renting my apartment this year. I've not rented it at all just because I was there and I didn't take any vacation since the beginning of the year. So my apartment is obviously not available 365 days a year. So the comparison has to be apples to apples. Again, like, is there some substitution? Is there some cannibalization? Yes, there is. There is a small portion of it, but I think most of it is actually incremental. And that's where, for Airbnb and its hosts to win. The hotels don't necessarily have to lose.
Okay. As well as the supply threat, you've come in with a completely different commission model as well. So what are you currently charging?
Yeah, so if you put your place on Airbnb tomorrow, and I hope most of you are doing it or will be doing it after this conference, you put it at 100, whatever, dollars, euros, whatever you want it to be, you will get as a payout as a host $97. And the guest will pay, let's say, 108. There's a range. So the guest will pay $108, for instance.
There's 8% charge to the guest and 3%
on the host,
to the host. Okay, that's a big threat to your model, isn't it, Andrea?
Well, I think we have a lot of respect for Airbnb because they were able to build very good business from scratch with very high growth rates, and they are very popular with customers. Of course, we always need to take into account that there will be new entrants. So we cannot just expect that everybody will come on Booking.com. So that is also an incentive for us to do better. We are also going more and more into this kind of segment, not exactly the same, because, for example, we don't do home sharing. But if, out of the around 23 million rooms that we have on our website, around 7 million come from non-hotels accommodation. We want to keep growing in this segment. We want to do it more or less in a way that allows also our customers to have the same experience as when they booked a hotel, which means, for example, no fee for them, which also means instant confirmation. So we also want to work only with properties who are able to have real-time availability, for example.
Okay. So, Francis, hoteliers who are worried about this margin impact of the OTAs, do you think sharing economy players and sharing economy platforms are an alternative for hoteliers? I mean, we've just heard 3% commission is a lot more attractive than the, say, 20%.
Well, I think in terms of direct hotel business, the share economy is something that probably affects less than what OTA business affects, because if you think about the big brand strategy or the hotel experience, it's something that probably the consumer will choose at the beginning of the decision of his journey. That's my perception at the time being. I don't think it's going to affect the hotel business in terms of share economy effect. I think that the OTA business is something probably which will give a bit of more struggling and more battling to the hotel management and thing. There is a trend, which is the share economy. We can see it not only Airbnb, but HomeAway, I think, One Fine Stay. There are a lot of players in this area. So there is a trend which is a must to remind. And many hotels are trying to adapt to this, because they're trying to invent part of their inventory to apartment style, which is not the exact model, but something like that. So there is a kind of, and another point is that sometimes in one location, you will find Airbnb probably a choice in some locations where is much a better choice than a hotel. So there is some eyes on the share economy model, but I don't think for hotel direct business, which is very well managed for a niche product and for a hotel lifestyle, this will represent a huge, huge impact.
Okay. And just to be clear, Olivier, you're not keen on having hotels listed on your platform, are you?
No, actually, that's not the reason why we build the platform. The reason we build the platform is for everyday people to actually list their home when they are not there. So the product is not built for hotels. Like some of you might have tried to put your hotel on Airbnb. It's a little bit cumbersome because the product is not done for this. So that's not, we're not planning to have hotels on the platform.
But you work with Bridge Street, the service department provider, don't you?
Yeah, so Bridge Street is the other way around, which is they're using Airbnb properties for their guests. So basically when they want to relocate somewhere, they say, hey, why don't you actually go on Airbnb, book a property for a couple of weeks so that you can see what neighborhood you want to live in, and then afterwards you'll get a long-term rental, which is one of the use cases. A lot of people, when they move to a new city, actually do that just to get to know the city and explore different neighborhoods for a couple of months.
Okay, great. Well, I've got lots more questions, but I'd like to come out and give you the opportunity. So we have a question straight here at the front, please. Just tell us who you are, where you're from. Be great. The microphone's on its way. No, it's just here.
Thanks. Jeff Robinson from Oricon. I'm interested in getting the panel's view on, there seems to be a big push from the hotels and so on to go and say, look, the playing field with Airbnb isn't fair. They don't have to meet the same kind of standards around fire and life safety, etc., etc. I'd just be interested in getting the different views of the different panel members about trying to create somewhat of a level playing field.
Level playing field. So I guess, Olivier, come straight to you. So there's three areas I hear complaints in terms of your platform, that you're not there. So it's about tax, you're not paying the same level of taxes, so most of your hosts are not paying tax, they're not registered for tax. I know that's, you say nothing to do with us, Gov, but that's an issue there for hoteliers. In terms of the overall regulation, in terms of planning, particularly in terms of in terms of area, in terms of what use class some of the buildings. So you're having short-term rentals in areas which are for long-term residential use. So that gets people very cross. And the final thing is life safety. So hoteliers have a huge area where they have to comply with life safety. So in the UK, for example, even if you rent out a house, you have to have a gas certificate. You don't have to have a gas certificate to be on Airbnb, do you? So.
Yeah, so maybe touching on the three items. So the taxes, first there are taxes existing in all countries, almost all countries, whether it's a tourist tax that applies to Airbnb guests, or income taxes in most cases when you actually rent your place. So I'm going to take my example. Living in Paris, the guests come from Switzerland. They paid 83 cents per day per person of tourist tax. Airbnb actually collects it for them, which makes it easier for everybody. And Airbnb will actually remit it to the city of Paris at the end of the year. So we don't do that in all the cities yet, but that's one of our plans, to actually extend the collection of the tourist tax in as many places as we can. On the income tax at the end of the year, I'm just going to report whatever 500,000 euro that I'm making during this week, and I'm going to pay a certain amount of tax. We actually, taking Paris as an example, we did a comparison between the taxes I'm going to pay as an individual versus how much a hotel is paying. It's basically the same. In some cases, in my case, I'm going to pay more taxes than a hotel will pay, because I'm paying my taxes on the entire revenue, while a hotel obviously pay taxes on the benefits. So there is really a taxation that exists. Do people know about it all the time? Not necessarily, so we have to educate them. Can we help them in actually collecting the taxes, the tourist tax in particular? Sure, because it's much more convenient for Airbnb to do it than for me to go to my city hall to actually give a check of €5.73. So yeah, there are a lot of things we can still do, but I think we are going in the right direction. In terms of regulation, again, remember that the main use case for Airbnb is people like me going on vacation, a business trip, actually renting their place when they are away. 80% of people on Airbnb have one property. The vast majority rent their primary residence. So basically, it doesn't take any units out of the out of the house units market, because my place, I'm living in it anyway. So if I use it when I'm away here in Dubai, everybody wins. Again, instead of keeping it completely empty, I can welcome new tourists, and I make a little bit of money out of it, and it doesn't take any units of the market. In terms of safety, that's obviously something that we care a lot about. So I see two issues. In some countries, I think the safety requirements for hotels are just crazy, to be honest, and I think we are aligned with the hotels on that side, that it's becoming a little bit too much, to be honest. And on the other side, the fact that we don't have exactly the same requirements seems normal, because it's not the same type of accommodation. You don't ask the same crash tests for an electric car, an hydrogen car, a bike, or a bus, right? So the fact that the rules are different, and the fact that our hosts have to comply with the normal rules seems to make sense to me. Does it mean that the hotel rules are a little bit too much? I would agree with that.
Okay. Francis, the unlevel playing field regulation-wise for hotels versus sharing economy, what's your thoughts?
Well, I think that the regulation is something that the hotel industry is facing a lot for many years now. There are a lot of different kind of accommodations inside the market, which has faced a lot of struggles for hotels, like apartments, bed and breakfasts, and now the share economy is something that we need to face. I think that the regulation has to be something which has to be much more visible for hotel industry, which I think they do not know exactly what the share economy model or other infrastructure have to face in terms of adapting. So I don't think they have a visibility at all. They just know, the sentence from hotel is they don't pay taxes. Probably it's not true. Probably it's true that at one extent that the model is totally different, but it's not true that they don't pay taxes at all. So I think that there's a need for more visibility in terms of regulation. And I think that the share economy needs to adapt also to what the final consumer is expecting from its booking online. So I think that when you book online, you're expecting a lot of reassurance in terms of consumer feedback, and I think that that's something that they need to adapt. So that's
Great,
for sure.
great, thank you. Let's squeeze in one more question, please, just over here. Maybe just tell us who you are and where you're from.
Hi, I'm Animesh from King Abdullah Economic City in Saudi Arabia. Two very quick parts to a question. Number one, in the era where the hotels are expected to maintain rate parity, on the other hand, the third-party providers have the secret deals, genius status. How fair it is to maintain rate parity? Number two is, well, obviously the big boys, the operators were caught napping when the technological disruptions came about. What are your challenges? How do you see the market evolving from now on? Because it could always happen that this trap becomes a little too big, or this entire OTA model becomes a little too big, and then something changes. So what's the future that ways?
Great, so that's rate parity, what's happening at the moment, and the future, and that's a great one to end on, I think. Andrea, in terms of rate parity, when I look at the SEC filings of Priceline, there's about at least a dozen lawsuits going on in all sorts of different territories with rate parity. What's the situation?
Yeah, in Europe, basically, I think there are around 30 competition authorities. 20 of them thought that there was not even the case to open an investigation. Out of the 10 that opened the investigation, 9 accepted our commitment, and only one, the German authority, said that sorry, basically our commitments were not enough, and that there should be no any form of parity. So I think it's, of course, we respect also what the German authority said, but we have to take into account that it's 1 out of 30 that really looked into it. So on one side, of course, we really think that for us it's important because there is why we should offer a hotel to our customer if they're not willing to give our customer a good deal. Why we should promote a hotel if one click away our customers could find a better deal. There is not really much point in doing that. Besides that, if I can comment on the question, because we're also referring, for example, to our loyalty program, Genius, which I think was a very good question. So basically, for our loyal customers, for our repetitive customers, there is a possibility also to get 10% discount when they log in on hotels that are willing to give that discount. So what we realize is that these customers are customers that book more frequently, they cancel less, and at the end, that the ADR is also higher because they look for the hotels giving the discount for the Genius rate, but most of the time they end up booking a normal rate. So the ADR is also positive for the properties. So this is not something that hotels need to do. If they think that is something interesting for the business, they can do it. Otherwise, there is no need for doing that.
Okay, so in terms of your agreements now that you're signing with hoteliers, rate parity is insisted upon outside of the EU. Within the EU, it's rate parity just with the hotel direct booking website.
Correct.
But France and Germany, there's no rate parity at all.
Yeah, France is not because of the competition authority said that we were fine, but it was the parliament that autonomously changed the situation.
Great. Well, we're out of time. So I'm just going to ask for that final part of the question there in terms of the vision for the future. If I could just get a thought from each of you in terms of what you think is something to watch out for in the next few years ahead. So let's start with you, Francis.
I think one of the main points is mobile. Mobile is always more increasing in terms of traffic. Google and previous speaker talked about it. I think that also the conversion part will increase, and whoever does not adapt, and believe me, there are many, many, many hotels who have not adapted yet to mobile policy. It's not just the version of what they have, but it's also the commercial advice. So I think that mobile is one of the most important things, and it's not rate, but it's also last room availability, which is one of the most important things today. But in the inventories that hotel gives sometimes are not enough sometimes to face an OTA balance competitiveness. It's not just the rate in itself. Sometimes you just go on a meta search and you just don't find availability. So you need to compete, and that brings me to the new trend, which is you need skilled people. You need skilled people, know-how, and revenue-wise people inside your hotel business. There's no way out, other ways.
Great, thank you. Olivier.
Well, just to take back the theme of this morning around blurring the lines, I think in Sky's presentation we could see that the meta is becoming OTA and vice versa. We could see that Booking.com is getting into the non-traditional inventory. Expedia bought HomeAway a few weeks ago. Accor Hotel bought one of our competitors, One Fine Stay. So we can see that there is a lot of things happening where it's important to take an option on the future so that we don't miss out. And I think what Accor Hotel is doing is actually very smart. They're obviously a hotel chain, but they're also becoming an OTA, and they're also part of the sharing economy. We'll see which one is going to play out, but I think having options is key because nobody knows exactly what's going to happen in the next few years.
Super. And Andrea.
Yeah, I agree with mobile. Today, mobile reservation are around 1/3 of our business, but it's the one that is growing the fastest. So I think in less than a couple of years will be our main channel. And today at Booking, for example, we have around 200 people working only on mobile. If you think about all the combination between the devices and the operating system, I think it's around 300. And there are some important markets like, for example, Saudi or China, that they only book through mobile. Another aspect that we are going more and more into is also into more inspirational search for our customers. So far, Booking.com has been seen also only as a very efficient way to book a hotel when you already knew when and where to go. Now we also launch our passion search, where also you can get inspiration based on also on the feedback from other customers, where they say, okay, I want to go somewhere where I can do shopping, I can go to the beach, and I can have great meals, for example. And we say, okay, why don't you go to Dubai? So this is more and more new way to inspire our customers that we are engaging in.
That's great. That's super. Great way to end the session. Please thank my panel.